Hello, friends. Welcome back to Alpha Beta Soup. I'm TXMC. I've got a few things on my mind that I want to talk about today. I don't know how long this video will go, so we'll just riff until I run out of things to say. We'll talk about the Bitcoin price chart. We'll also briefly touch on equities here. And what we'll explore mostly is the current price action and how it relates to previous periods of accumulation, how long it takes, and where it goes. We'll also use a couple of tools to get an idea of how deep we think this pullback can go and where a local low could be established. But before we get into any of that, let me make one quick announcement. If you ever receive an email claiming to be from me, that person is a scammer. I do not have a way to email my YouTube subscribers. I don't know your address. So when you receive an email from me, it's because someone hacked YouTube and got a list of my subscribers. They probably did this to a bunch of other channels, and there's very little that I can do to stop them from contacting you. All I can do is make you aware that it is not me. I would not send you an email campaign talking about my own plans for content, talking about my portfolio, talking about quote-unquote crypto broadly. That's not my bag. That's not how I operate. All of my content is here on this channel or comes from my Twitter page. So please, if you are getting emails from someone claiming to be TXMC from Alpha Beta Soup, that person is blowing smoke and it is not me. So be careful. But now that we've got that out of the way, let's start talking about Bitcoin. You know, this market is very difficult to read right now. We've got the highest inflation print that anyone has seen in decades. Yesterday coming in at 7.9%, the headline CPI number year over year. And most of us know that that is a doctored number. The real inflation number is likely double digits. So we've got that going on. We have a commodities boom triggered by a supply shock that began before two of the world's largest exporters went to war with each other in Russia and Ukraine. We've got all that happening on top of the Federal Reserve coming out next week and beginning what many expect will be a series of rate hikes, or at least their attempts to hike interest rates. All this is happening at the same time. It's making it difficult to get a clear read on any asset, let alone just Bitcoin. If I flip over here to my daily chart, Twitter was going crazy just a couple of days ago because we got this fat pump. Right here, we got like an 8% green day where we bounced back over 40,000 up to about 41, but we've since given back most of those gains. And what I pointed out on Twitter that day was that it was the third time in just the last couple of weeks that we've had a large pump that was immediately reversed. The market is not showing a readiness to rally out of this area just yet. And every time we get one of these pumps, inevitably there's a lot of excitement on Twitter. But I want people to take contextual note of where price action is in relation to these pumps. The first thing that I notice about this is 40,000, which is right here, is being utterly disrespected, completely ignored by price action, which I think is kind of interesting because 40K, if we zoom out here, 40,000 has basically been a bull bear oscillating level for price for the entire past year, basically where this dashed line is. And you can see we got underneath it during the summer bear. We found it as support for the rally in September. It caught support in October before what sent us to all-time highs. And in the last few weeks, we've been chopping above and below and completely ignoring its significance. And right now, if I'm being honest, what I think is a more important zone than 40K is probably this one, probably around 45 to 46,000. And if you look at this price action right here, it held as support through January after the liquidation wick and the recovery after that. And once we plowed through it, price really has not wanted to close in this area. You see this? Look at all these candles. They're basically avoiding this box. It's similar in position to this liquidation wick that came in on December 3rd, which came down to about 42,000. And you can see price is struggling just to stay above 42,000. So right now, what I think we need to be watching for, if we're just going to look at super micro price action here, there, none of this chop really means anything until price gets back up here, finds support, and then bounces up, right? Anything else, any other pumps in this range down here are utterly irrelevant until we see this move, because this is a no man's land. Price doesn't want to go here. So until it does, there's very little to get excited about in seeing candles down here. I throw on my drawdown tool. So this is an indicator I wrote that shows rolling Fibonacci drawdown levels based on the recent highs. And so what you can see is price has pulled down now to about the 500 Fib drawdown, which is a 50% drawdown. We're a little bit above this level, chopping around between halfway and the 382 drawdown, which is a 38.2%. Now, these are Fibonacci numbers. They're the same levels you'll find on a Fibonacci retracement tool if you were to use it. So there's 236, 382, 0.5 right there. And I like to use this as a barometer for how deeply assets have pulled back. And we can see here Bitcoin has twice in the last year pulled down to this 500 Fibonacci retracement, the 50% mark. And we're just kind of chopping around in here, not really showing a lot of direction. And as we just explored, we've got some resistance sitting above us here around 45,000. And you know, for Bitcoin's part, having a drawdown after an all-time high down to just 50% is not very steep. That's actually pretty robust for what Bitcoin has done historically. Usually the drawdowns are 70 or 80% or more. So we've had two 50% drawdowns, which I think is part of the reason why so many people are still expecting there to be another leg down, because often when a bubble pops in an asset, the drawdown is more than 50%, especially on newer assets that are tied to innovation. In many cases, those tend to draw down 70, 75, 80% before the market reverses. So I think a lot of people are still looking for Bitcoin to make its way down into this zone. Here is 70%, right around 20,000. The realized price, which is the average price of all Bitcoin since it last moved, is in this general area, right around 24, 25,000. So there's a lot of people looking for traffic to get down into this price range. Don't know if it will. It's hard to say for certain if we would actually bounce down here before we got like some kind of a relief rally. I'm unclear about what I think price action is going to do. So all I can really do is lay out probabilities and try to contextually frame where price is and what it has done historically to use past history as a reference point. So when we look at the last year, we can see this drawdown is pretty much on par. And you know, a lot of people are very disconcerted by this price action. It feels painful. It's very drawn out. We don't know when it's going to end, and it just seems to kind of go on forever, right? But if we look at some other drawdowns for Bitcoin, they are very similar to this. So here we are at the top. This is the chart we're just looking at. Here's current price action. Down here at the bottom, this is the middle of 2019. You can see here's the 2018 top, here's the 2018 floor, and here in 2019 is our little mid-cycle rally aided by the plus token Ponzi. And what I want to look at here is the price action after we hit this mid-cycle high. So the reason I pull this up is because I want to look at this drawdown. Look at the chop. Look at how painful it is. Look at the level that it pulls back to. See this? First, it pulls down to the 236, then it finally chops around a little bit above the 382, and then we get down here to the 500 drawdown. Well, what do you know? That's almost exactly what happened over here. Got down to the 236, fell down to the 382, chopped around, went down to the next level. Just stair-stepping, one level at a time all the way down. And we're doing almost the same thing here. Now, the candles themselves don't look exactly the same, but the general motion of the market is quite similar. Now, I'm not trying to put a lot of focus on this part right here. I don't know if this is what we will get. So I'm not making that the focus. My real attention is right here because it very much is similar to what we're going through now. These type of crash reaccumulation phases can be very drawn out. We look at a date range on this. This area right here is 218 days. Over half of a year spent in this brutal, choppy price action. How long have we been doing it now? 120 days. So we're just a little more than halfway through what one of these processes can look like for Bitcoin, just going off of recent history. So I like to show this because it helps to frame my expectations a little bit in feeling like, oh my God, is this ever going to end? Surely this can't go on forever. Well, friends, it can go on for a really long time. It can go on for over 6 months or more. And right now it's only been about 4 months. So to bring it back to the price action, what I'm kind of looking at right here, I'd like to see us hold this area. I wouldn't like to see 29K properly tested because I think it would fail with the current market sentiment being what it is. So I like that we've got these higher lows. This kind of structure here is generally bullish. It'd be nice to see this hold. But as we just explored over here, there's a reasonable chance that we just continue chopping around in these retrace levels, which we're currently in. And until we get back over this kind of no man's land of price right here between 45 and 46,000, I don't see a lot of reason to get excited about any short-term pumps that we may notice in this range down here. And to go one step further on probabilities for where the low could be, I want to use the Mayer multiple. So the Mayer multiple is based on the 200-day moving average of price. This isn't an on-chain metric. It's solely based on the 200-day. And say what you will about moving averages, I don't use them very heavily in my own research, but I know that many traders look at them. And the 200-day moving average might be the most popular of all of them. So while I may not use it, it is contextually relevant to a lot of market participants. So what we're looking at here, this is on checkonchain.com. It's a free website run by Checkmate, the lead analyst at Glassnode and a friend of mine. So what he did was determine how much of Bitcoin's life was spent at different percentages away from the 200-day moving average. And that's what's represented on these bands here. And what you can see if you look at these bands, it's really a remarkable chart. It shows how rarely we reach these points of full extension away from the 200-day moving average. This peak here in December 2017 is at the 5% line on his probability bands, meaning that only 5% of Bitcoin's history is spent this far away from the 200-day moving average to the plus side. So what I want to look at here, we'll zoom in on the current market just to get real dialed in here. Here's the 200-day in this dark pink going through the center. And the band that we're currently sitting on is a 20% band. It's a 0.8 multiplier. We're about 20% deviated away from the 200-day average. It's up there about 48,000. And what this is saying is it's showing 20% next to this band that I'm highlighting. And what it means is throughout Bitcoin's history, there is a 20% chance that price action will go lower than where it is now based on what Bitcoin has done in relation to the 200-day throughout its history. Does that make sense? We can say by looking at this price here in this zone that we can assign a roughly 20% likelihood that we go lower than this value. Now, this lower band here, down at 29,000, represents a 10% mark. And that is saying that there is a 10% likelihood that Bitcoin could trade below 29,000 based on where the 200-day is right now. And seeing as how the macro environment is such a mess and how difficult it is to get a clear reading on where the market might be going, I think it's fair to assign where we are currently about a 10% likelihood that we wick down to 29,000 from here. It makes sense. So I do like to use this model as a way of proof of concept testing what I think the market is doing. But also in times of uncertainty like we have right now, it can be really useful for helping to calibrate your mind in determining where you think price can go in the near term in relation to its own oscillations. When we look at the Western markets today, they are kind of a mixed bag. It doesn't look like any of the indices are really running or falling that much. They're all less than a percentage point green and red. So kind of a mixed day with equities as we see Bitcoin now giving back much of the gains that it got in that pump from a couple days ago. So as we explored, we're about 120 days into this brutal drawdown and accumulation. We've seen in the past, just most recently, one of these go on for almost twice as long as what we've currently experienced. And I'm not even measuring this whole move. I just stopped where the box goes. It actually continues on all the way down to here. But I do think that we're closer to the bottom than we are to the top. And I don't know if we're going to get some kind of brutal liquidation wick that shoots us back down into the 20s that takes out these lows. I can't say for certain if we will or not, and I wouldn't take the boldness to make that call, not in the current environment. But barring some kind of move like this, I think it's reasonable to say that we are likely near the bottom, at least for now. But until we reclaim this level around 45,000, see strength and conviction to the upside, there's not a lot to talk about in what's going on down here. So I know I've been expressing a fair amount of bearishness and caution on the channel in the last few weeks, last couple of months, and it's been justified. We've seen how the market is playing out, and that is why I haven't been very bullish. And I want to express that while I feel that the world economy is showing a lot of warning signs, while I think that the likelihood of a recession is growing by the day, I do still maintain a long-term bullish outlook on Bitcoin. I do think it's remarkable that world governments are currently running a very effective ad campaign for Bitcoin's real-world use cases. It's being battle-tested in actual scenarios with what's going on in Canada, with what's happening to Russian citizens being unable to access their money. There's a lot of different things going on right now. Even what's happening here in the United States with the recent executive order and some of the things set in motion in Washington in relation to crypto. We're seeing a surge of acceptance, of interest, and it's possible that we might reach a point in the near future where we see a surge of adoption, one of those breakaway moments, but those are hard to predict. And I want to believe in the romantic narrative of Bitcoin. I want to believe that people will see this asset, which has historically been the filet mignon of risk, hanging out in the middle of a yearly range while the rest of the world goes to shit. And I want to believe that Bitcoin will break away and start to realize its own potential amidst a sea of chaos, that people around the world will flood into it trying to seek censorship resistance, trying to protect themselves from financial lockout, trying to avoid currency debasement, all of those things. And that may happen eventually. I believe that over time, investors will come to understand those things. But we're only 13 years into a brand new monetary concept. And in many cases, investors broadly still see Bitcoin as the premier asset representing risk. And so they treat it that way. And it behaves that way, even though by design it is meant to be more stable. And my gut feel is that we may be a couple of market cycles away from reaching a point where Bitcoin sees that kind of maturity. And so when I hear people talking about a bull run and all-time highs for Bitcoin in the next quarter, in the next few months, while I'm seeing the highest inflation we've seen in decades, when we have record debt to GDP levels, when we have record exposure to the stock market for American households, all happening while we're heading into a period of slower growth in the middle of a commodity boom driven by a supply shock that began before two major exporters went to war with each other. When I see all of those things happening and people are still calling for a Bitcoin bull run in the middle of all of it, it feels detached from reality, if I'm being honest. It feels unrealistic. And it feels like an attachment to a romantic narrative that people want in their hearts, but aren't necessarily seeing corroborated in the technical charts. So yes, hodlers are hodling. Long-term holders continue to amass Bitcoin as spending is reduced and the market waits for direction. A lot of various metrics on chain that I'm not showing you right now, but that I'm referencing, indicate long-term secular growth. But in my opinion, it is not wise to pretend that Bitcoin exists in a vacuum and that it is uncorrelated to traditional markets, because it is correlated, it is linked, and everything is moving together right now. So if we're going to say Bitcoin is going to have a bull run, we need to say everything is going to have a bull run. And if I'm trying to project out what scenario I believe would lead us to that conclusion, there's only one real path I could see toward that. And it would have to be that the Federal Reserve comes out with surprise dovishness, shattering their credibility and showing the markets that they have no intention of raising the cost of capital. Surprise dovishness would A, destroy the credibility of the Federal Reserve and make it exceedingly difficult for them to address any of these issues going forward in a meaningful way. But I think it would also spur a bullish rally in the markets. And I could see that scenario playing out if the Fed does anything more dovish than stick to their existing plan. I could see that as a catalyst for a near-term rally. I don't know how high it would go, but I could see that environment playing out, especially after we have multi-months of drawdown. Just the pure physics of it would suggest that at some point the market would want to go the other way. And with the FOMC meeting just next week, I could see those pieces being laid out. I could see that scenario being locked and loaded to play out just as I described, but we'll have to wait and see. We need to observe what happens next week and how the markets react rather than trying to predict those things. That's really what I wanted to talk about today. Just some thoughts I've had on what's been going on the last few days and how I'm framing my thought process about the current price action and what I would want to see to start feeling like the next rally could be kicking off. We haven't seen that evidence just yet. Make sure you follow me here on Twitter at TXMCTrades. This is where I post a lot of my ideas and analysis, and it's the only social media that I'm active on, so make sure you link with me here. I hope you all have a relaxing weekend planned ahead of you. We'll let this play out for a couple more days and see what the beginning of next week has in store for us. If you have any questions or comments for me, make sure to leave them down below, and I'll be sure to read through them. And we will chat again in a few days. So until next time, take care of yourselves, spend some time with your families, and be kind to each other. We will chat very soon. Cheers.